Welcome, everybody, to the Weekend Report 11/17/2023. We are almost through with this year, and we are that much closer to Christmas. I feel like it was yesterday when I was saying there was 3 months till Christmas, and we're almost just a month away. Crazy. This week was a big week for interest rates and the market in general. We had CPI and PPI, so let's get right to it with those slides, starting with Consumer Price Index for the month of October. This is the Fed's favorite measure of inflation. They look at the core number. Now, the headline number was flat, 0% month over month. The core number was only up 0.2%. And I say only just because the inflation numbers this month were, for the month of October, were a little lower than expectations. So that is good for us. You can see year over year, the core numbers dropped from 4.1% to 4%. Now, within this report, what I want to point out, which is important, is the shelter component has been that one component that has been a drag on the CPI report for several months, the core number, specifically because it makes up almost 44% of the core inflation number. Within that report, lodging away has been a very volatile number for us. In the month prior to October, it was up 3.7%. So for the month of October, it's been very helpful that it was actually down 2.5%. So that was really good. Also to point out within this report is motor vehicle insurance and health insurance cost. These will be the two, I think, drivers on the CPI or the CPI core numbers that will be a little bit of a drag. Motor vehicle insurance, with the amount of car thefts we're seeing as of late, this will continue to go up most likely. You saw it was up 1.9% for this report in October. That's a pretty big move. On health insurance, over the past several months, the way it has been calculated has made it appear that health insurance costs are going down. But if you're like me and you're shopping health insurance, you know that, in fact, health insurance costs are going up. They have since refigured how that is calculated, and you can see it is now up 1.1% month over month. You should continue to see this number go up month over month as well. Now, producer price index report, this is wholesale inflation, doesn't get the same amount of attention as CPI, but this one was talked about quite a bit because the actual numbers were quite lower than the expectation. For, if you look at the headline month over month, the estimate was that it's going to be up 0.1%, and it was actually down 0.5%. And that's a pretty big shift when we talk about just inflation numbers, because you know that they don't move a lot month over month, but that's a pretty big change versus what the expectation was. So just wanted to point that out. Also this week, we got information on jobless claims. The initial claims were up 13,000, but of note was continuing claims up 32,000. So this does speak to people having difficulty finding new employment. What's also important to note is holiday hiring. It's this time of year where we see seasonal job opportunities and people picking up part-time work. However, what's happening this year, which is very unusual, is that there will be 40% less than the normal amount of seasonal hiring available because there are just a lot of companies that are not going to be bringing on a lot of seasonal work. So that's interesting and could hurt people financially if they're used to picking up some temporary work over the holidays. Also, a big talking point this week was retail sales for the month of October. And the reason why is because it was only, it was down 0.1%. Over the past several months, there's been a lot of talk about the consumer being resilient. Even the prior month to October, retail sales were up 0.9%. So this is a really big shift month over month from 0.9% up to down 0.1%. This does speak to the fact that consumers are probably getting a little nervous about the fact that they've continued to spend their savings maybe on items that were not necessary. So we're getting to a point where people are probably buying what is needed as opposed to what is wanted. And this could impact what we see in terms of retail sales as we move into the holiday season now. This is the big opportunity for spending, but will we see consumers cut back as they have less income to work with? Mortgage applications, we've talked about this also week over week. And as expected, they did go up again this week as we continue to see interest rates come down a little bit week over week. Purchases were up 3%, refis up 2%. And of note, of the volume that was closed last month, a third of it was in refinances. So this does speak to the fact that if you carry enough debt, refinancing into a 7% interest rate can financially benefit you. So don't focus so much on the interest rate number, but rather what your monthly outgoing is in terms of debt. A refinance can make a lot of sense. So better to pay at 7% versus 22% on credit cards. Just saying. So now a lot of the talk has shifted from when the feds will start decreasing short-term interest rates. I think we've kind of gotten out of the next rate hike. We might have possibly gotten away from that talk. That's been really detrimental to us over the past several weeks as we continue to see Fed members saying, well, we probably need more hikes. We probably need one more, or maybe two more. That has been impacting the interest rate market. But now with CPI, these numbers out, with the jobless, unemployment claims going up, with retail sales being lower, this may finally be kind of an eye-opener for the feds, and they might be like, okay, maybe it's time to stop hiking those short-term interest rates. The consumers are feeling the pain. Historically, the time it takes before we start seeing the feds decrease the short-term interest rates has been 10 months. So the last hike we saw from the feds was in July of this year. So if that 10-month holds up, that means we can expect the first rate decline to be in May of next year. So we'll see. It's just something that it's kind of a target at this point, but sure would be nice to see. So let's take a look at the markets right now. We've been fluctuating a little bit today, down a little bit, up a little bit. Nothing really, really volatile. As you can see, we're just up 1 basis points for the day. But it has been very nice to see this shift over the past several weeks. We've seen about 3 weeks now of improvement in the interest rates, and we'd like to continue to see this. So we'll see what happens next week. It's going to be, because of the holiday week, it's going to be a very short week, not a lot of information released. So you won't see me bringing any reports next week, just not worth it. I will bring you the next update in December, so December 1st. So since I won't see you next week, just want to say happy Thanksgiving. I hope you have a great time if you're spending it with friends or family. That's a great holiday for you. I do appreciate you watching my videos. Any likes and shares, I do appreciate. Any comments or questions that you have for me, please shoot them my way. Always happy to hear and help in any way that I can. Otherwise, have a great weekend. Have a great Thanksgiving, and see you.